Well, Zillow did it yet again. For the fourth consecutive month, Zillow downgraded their 12-month housing market forecast. So in today's video, I'm going to share all the details. I also have some news regarding price reductions across the United States because this is one factor that Zillow is now looking at in formulating their forecast over the next 12 months. And with that said, if you guys get any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Also consider subscribing as well. I post frequent housing market updates so you guys can be more informed. And with that said, let's go ahead and dive right into the video here. Thank you so much for joining me. I actually really enjoy making these videos for you guys. So Zillow's home value forecast expects a significant slowdown in annual home price growth. So check this out. The current rate of home prices increasing on a year-over-year basis is currently at 16% per Zillow's data here. But they're forecasting for over the next 12 months, this is basically through July 2023, for home values to only increase by 2.4%. That's a big turnaround. 16%, the current rate right now decreasing to a rate of 2.4% over the next 12 months. They also cite here this is a big downgrade from the previous forecast for June 2022 to June 2023. Because in the previous forecast last month, I made a separate video regarding that, they were forecasting for home values to increase by 6.9% over the next 12 months. Now they're only calling for a 2.4% increase through July 2023. Zillow cites this downward revision here due to quickly changing observed market conditions and an update to their forecast methodology. Again, regarding home price reductions, and more on that here in just a little bit. It says the nation's median home value actually fell 0.1% in July from June, the first monthly downturn since 2012. So home values decreased by only 0.1%, but this is the first time that's happened since 2012, which is pretty eye-opening. In regards to this update they have for their forecast, their new forecast actually incorporates houses that are listed for sale that have price reductions. And they mention here that the share of price reductions has seen a big increase in recent months. So in regards to that, I actually want to share the most recent trends we have from altosresearch.com. They have a great YouTube channel if you guys want to check them out. Again, that's Altos Research. The share of price drops right now, at least for the 7-day average ending August 19th of this year, is basically at 39%. So approximately 39% of home sellers right now, or the houses that are listed for sale, have had price reductions. So that's a national average according to altosresearch.com. But Redfin posted an interesting article last week regarding price reductions across the United States, because national averages is around 39%, but other areas are seeing a huge uptick in price drops, especially in Boise, Idaho, where 70% of active listings right now have had price reductions, which is absolutely insane. So take a look at this. I want to briefly share this because the numbers right now we're seeing for price drops is pretty remarkable when you look at right now, or July 2022 compared to July 2021. Then we'll go back to Zillow's forecast here. So Boise, Idaho, the share of price drops as of July 2022 is basically at 70%. But look at this dramatic change compared to 1 year ago. 1 year ago, the share was basically 30%. So the share has more than doubled in one single year, which is pretty eye-opening. Denver, Colorado was in second place for the metros they looked at. By the way, they look at the 97 most populous U.S. metros in order to formulate this table here. So number 2 was in Denver, Colorado, the share at 58%. Just actually goes to show how much Boise, Idaho is at 70%, basically 12 percentage points higher than second place at Denver, Colorado. Anyways, Denver, Colorado at 58%, far higher than last year's levels at 36%. Salt Lake City, Utah, over 56% as well. Tacoma, Washington at 54%. Tampa Bay, Florida at 52%, only 28% 1 year ago. In Sacramento, California, where I live and work as a real estate agent, the share is basically at 52%, only 32% last year. And also in Phoenix, Arizona, look at that, 50% right now. The share last year was only 21%. Other areas worth noting here were San Diego at basically 50%, Portland basically the same as well, Stockton, California, just south of Sacramento at 47%, and Austin, Texas, as well as Dallas, Texas, as well as Nevada, all around 45%. In stark contrast, have a look at this. This is the lowest share of price drops as of July 2022 based on these 97 metros they look at. So McAllen, Texas, the share is basically only 15.7%. In Newark, New Jersey, 15.8%. Honolulu, Hawaii, only at 18.5%. Miami, Florida, very interesting to see that the share is only at 18.5%. All right, so going back to this forecast from Zillow here, they basically cite here that this sharp increase of price reductions is due to homeowners adjusting their strategies amid changing market conditions. So in other words, home sellers, maybe some home sellers, are still pricing their houses very aggressively, and they're finding out the hard way that home buyers are really not biting. Therefore, they have to reduce their asking price in order to attract a home buyer. That's basically what we're seeing right now overzealous home sellers. I also want to talk about their forecast for existing home sales. I actually disagree with them regarding this, but I actually want to provide some details regarding that. So their forecast is calling for 5.3 million existing home sales this year. In 2022, they're calling for 5.3 million home sales. This is a 14.1% decrease from 2021. And as you guys all know, I support my claims with data here, right? And I also want to provide some insight because just throwing out 5.3 million home sales, what does that really mean, right? So take a look at this. This is from the National Association of Realtors. In 2019, we basically had 5.3 million home sales. Again, these are for existing home sales, not brand new homes. So 5.3 million home sales in 2019, then an increase in 2020 at 5.6. And in 2021, last year, we basically had 6.1 million. The most recent trends we have right now for a seasonally adjusted annualized rate, so annualized numbers right now for July, is at 4.8 million, a big decrease of 5.9% from last month and a giant decrease from 1 year ago by 20%. So on an annualized basis, we have 4.8 million home sales. So at the current sales pace for July, if you actually multiply that by 12, you would get 4.8 million home sales. So Zillow is calling for 5.3 million. So what's going on here? So here's what I did. So for January through July this year, for not seasonally adjusted numbers, these are not analyzed numbers here. So if you actually take the actual raw numbers of home sales per month, that's these numbers right here, 352,000, again, 352,000 in February, and so on and so forth. So in July, they had 453,000 home sales for not seasonally adjusted. So here's what I did. I took those numbers and found out how many houses have been sold so far this year. Again, not seasonally adjusted. So we basically have 3.1 million year-to-date total existing home sales per the National Association of Realtors. So 3.1 million. Their forecast is calling for 5.3 million. Therefore, we need 2.2 million more home sales from August through December of this year. That would equate to 444,000 home sales per month on average from August to December of this year in order to get to their 5.3 million forecast. So we basically need 2.2 million more home sales for the remainder of the year, and that averages to be about 440,000 on average per month for the rest of the year. So in my opinion, that's a little bit overzealous or a little bit ambitious, I should say. Because the sales pace for July was 453,000, again, not seasonally adjusted. So they're basically calling for August through December to basically be just under July's levels. And so in my personal opinion, we're going to be seeing levels far below 450,000. Looking back in January and February of this year, we had basically 352,000 houses houses that actually has sold. So in my personal opinion, to get to 5.3 million, which by the way would basically be the same number of home sales back in 2019, I think that's a little bit overzealous. I'm personally going to be forecasting. I'm going to be throwing out there. I mean, I'm not a real estate market fortune teller, as you guys all know. My crystal ball broke a long time ago. But I would say that it would be very reasonable to see about 5 million to 5.1 million home sales in the US this year. And that would equate to about 400,000 home sales per month, August through December of this year. So about 400,000 per month for the remainder of the year. But I think they're pretty close, 5.3 million. I'm calling for about 5 to 5.1 million. So just want to give you some context regarding that. It's really hard to figure, 5.3 million. So what does it take to get there? So hope that helps in order to help quantify what's needed in order to get to 5.3 million home sales. So they also wrap up this video here, or they wrap up this forecast here by talking about the recent economic data sending mixed signals for this economic outlook here. because they talk about stronger job growth here in the US. Meanwhile, of course, inflation is still a very big problem across the United States here, and this will influence the Fed's policy decisions in the months to come. So in regards to the Fed's policy decisions in the months to come, Jerome Powell, who's the chair of the Federal Reserve, of course, actually announced today, which is Friday the 26th, he said, the Fed is ready to bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. So it's going to be interesting to see if they become more aggressive on their rate hikes, and that could cause volatility in the mortgage markets, which could potentially increase mortgage rates further. In other words, current mortgage rates we have right now, I should say the yield on the 10-year US Treasury note, the yield on that has already baked into the fact that the Fed is going to be raising rates further this year. But it's based on their current plan, or the Fed's current plan of raising rates. So if the Fed actually becomes more hawkish and actually raises rates faster than expected, that could cause mortgage rates to increase further. And by the way, speaking of future rate hikes by the Federal Reserve, take a look at this. If you actually Google investing.com and their Fed rate monitor tool, it takes you to this website right here. So the next meeting by the Fed is actually in 3 weeks and 4 days, or their next meeting regarding making a decision regarding the federal funds rate. Their next meeting is in 3 weeks and 4 days, and that's on September 21st, 2022. So current rates right now are at 2.5%. So the federal funds rate is at 2.5% on the upper range right there. They're calling for a 61% probability that the Fed is going to be increasing the federal funds rate by 75 basis points. They're calling for only a 39% probability that they're going to be seeing a 50 basis point rate hike. And of course, I would love to hear from you guys. So please comment below. What do you guys think the Fed's going to be doing in their next meeting in basically 3.5 weeks? The street is forecasting for a 75 basis point rate hike, but could it be more? Please comment below. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. I look forward to seeing you on the next video.